Hello financial investors and welcome to the channel. In today's video we are going to be doing our stock market weekly recap for the 31st of August through the 4th of September 2020. We're going to go ahead and quickly cover the past week's changes for the week, which are up on the screen now, and then we're going to go ahead and cover some of the stock information for the 31st to the 4th. We're going to go ahead and look at the four main indexes, take a look at current stock futures, what the entire S&P 500 did for this past week. It was a lot of red out there, so techs are finally falling. We'll see if it holds out, if it continues to kind of trend down into a correction, or if it'll just kind of recover with this week. Also, we'll take a look at oil, dollar, silver, gold, bonds, and wrapping it up by taking a look at mortgage rates. So that is what we're going to be doing in today's video. If you are brand new to my channel, have not yet subscribed, go down below, hit the red button to subscribe to the channel, then hit the bell to be notified every time we release a new video, and then go down below, also smash the thumbs up, make it blue, and let's go ahead and get into the video. So we're going to quickly take a look at the changes for the prior week between the 24th and the 28th of August. That was the last full week of August, and now we are into September. So we had a really green market that past week. Microsoft 7.46%, Google over 4%, Facebook nearly 10%, Amazon 3.5%, Disney, Netflix, Nvidia, financials, everywhere was pretty positive, very bright green. Besides Apple, you could see the cool off taking place as it went into the stock split that took place on Monday. Now, we did see a few weaker areas. We saw healthcare slightly weaker, utilities slightly weaker, and a few REITs were actually pretty weak as well. So we covered that in both our weekly recap and our Monday's video. So overall, we saw the markets, S&P up over 3%, Dow up over 2.5%, NASDAQ was 3.29%, and the Russell 2000 was kind of hanging back at 1.67%. So those indexes did really well for the prior week. Now, just this past week, between the 31st of August and the 4th of September, after the markets, it's been quite a while since we've actually had a negative week. We can see as of, early August, let's go ahead and look at the 3-month period. So as of June timeframe, there was very little times where we had a lot of fallback. We can see a double bottom here with a lower bottom, but then we had high volume. So a lot of investors are buying in at this double bottom. A lot of investors bought in, volume got high, picked it right back up. We can see here that we just had broken to a new all-time high within the S&P 500, not this past week, but the week prior at 3,588 points. Now, this whole week here, this 5-day period right here, we had quite a bit of red out there, especially on Thursday. That must have been some job numbers came out that did not sit well with the market. I actually did not pay too much attention this week to the market. I never looked at my portfolio this week. This is the first time really taking a look at the markets, what kind of took place. And yeah, it definitely cooled off, and that could be because earnings had finally cooled off. There was a stock split between Apple and Tesla on Monday, and that's really all that kind of went on there. So a lot of the hype that's out there in the market just kind of cooled off, and investors took a chance to look at their portfolios and kind of decide, I'm going to go ahead and take some profits. And I think that's what kind of happened this week. So Thursday, Friday, pretty hard hit. S&P 500 went down 2.31%. Same thing here with the Dow Jones. Thursday, Friday hit the hardest with obviously some job numbers. I haven't looked at the job numbers, but it does look like that had some effect here on the market. There was some recovery on Friday. If you look at all the indexes, I know there was an article that was floating out there that the markets look like they started to recover towards the end of the day Friday, but because we did close, the markets didn't have that chance to actually go back into the green there. But who knows? Right now, futures are looking negative. NASDAQ, again, here we had Tesla and Apple split. That had actually been slightly positive for the NASDAQ there, but that quickly kind of went sour. And I know Apple and Tesla both got hit pretty hard this week, which we'll take a look at here in just a second. The Russell 2000 here, Monday down 1.04, Thursday, Friday down as well. So we have our worst performer, which is the NASDAQ here, down 3.27. followed right behind by the Russell 2000 down at 2.73, and then it goes into the S&P and then the Dow Jones. Dow Jones actually did the best of the four main indexes. Now taking a quick look here, let's take a quick look at Tesla, ticker symbol TSLA. So Tesla during the 5-day change went down 5.62%. I saw a lot of Facebook groups talking about talking about Tesla. Even on my personal Facebook page, my friends were commenting that they were buying Tesla after the stock split. And they were buying it prior to the stock split just because of how much it has been on the news. But once a stock is out there on the news that it's getting hyped up, that it's getting double digits, that it's X amount to the upside, that's not when you start buying it. That's already past, it's past the hype. Now that's all FOMO. All these articles are coming out, and investors are not really investors, but they're just buyers, are looking at it and going, man, I'm going to be missing out here. That's the fear of missing out. And they're buying into this high price, hyped up stock. And then what happens? Well, the sellers that have been holding since Tesla prior split, when they were holding at $300, $400 up to $2,000, they went ahead, sold out, and took profits. So this is showing Tesla down 5.62% for this week. And Apple, ticker symbol AAPL. Let's take a look at that one as well. This one is down 3.11%. So they did a stock split from, I believe it was $550 or $500. And I believe they started on Monday around 125. I don't see the day. It looks like they started right here, maybe a little bit above 125, maybe 128, somewhere in that range there. So that is the four main indexes along with Tesla and Apple. So futures right now, as we can see here, if I refresh the page, futures are going to the downside. S&P down 0.66%, the Nasdaq down 1.45%, the Dow Jones down 0.43%. They're saying that a vaccine won't cure the global economy. Obviously the global economy cannot be resolved with a cure. It's not a band-aid. It's you can't just patch it up and forget all about it. There's thousands of jobs and businesses that have had to close down because of what had happened recently, and there's not going to be like an easy way to recover and just flip the switch and make it all come back. A lot of those businesses are shut down permanently. The owners had to file bankruptcy or just don't have the funds to restart what they had spent years building up, and that's unfortunate. So now we're looking at a 1 week performance here of the S&P 500. So if you're taking a look here, every single sector that had been pretty green the past week, such as financials, we see Visa and MasterCard, PayPal, they were up pretty high the past week. If we take a look here, they are bright. So MasterCard 8.61, Visa's probably right within there, PayPal up nearly 4%. So now we're looking at it, they lost essentially all that they had gained the prior week, plus some from PayPal. We see Microsoft down 6.4, Google down 3.55, Amazon negative 3.15, Google 3%, Nvidia 4%. So a lot of red out there. And now there are a couple areas here that you can see are green. They're not pretty like bright green, but they are semi-green. If we take a look down here at the banks, we can see JP Morgan, Bank of America, Wells Fargo, Citibank, all pretty green right here down in the bottom corner. We also see some insurance here, a little green here. Aflac, look at that. I know a lot of investors are taking a look at Aflac over in the dividend investing groups on Facebook. A lot of them had posted at Aflac. Aflac was trading very, very low. And with the rest of the market shooting as high as it is, they were asking the group if now's a good time to buy Aflac. It hasn't been performing really well, and I posted in there that Aflac is one of those solid companies. I believe it's a dividend aristocrat that's been growing and paying out dividends for the past 25 plus years. But it may not be in the spotlight at this moment, but Aflac itself is a great business. So even though it's not in the spotlight, such as a tech company, with time, investors will go back and take a look at it, see that it's undervalued, and that it will begin to perform back to along with the rest of the market, or just kind of its average return for for the normal state. Utilities here, you can see most of the utilities are pretty positive outside of NextEra Energy and Southern Company there, so a lot of green there as well. So that's really the only areas that are green. Basic material chemicals, a few utilities, and banks and insurance. Now jumping over to oil. Oil down this week 7.23%. The dollar moving higher. You saw the market take a hit. So the dollar started around $92.29 this week, rode up to $92.84 this week. So that's a slight recovery for this past week, and that's just with the market falling and bonds falling, everything else falling, the dollar just getting slightly stronger, but in reality it'll probably continue to fall, maybe below 90. We'll see. Silver this week down 2.23%. Gold down 1.45. Kind of interesting that the market falls along with silver and gold. Bonds actually staying flat but positive for this week, up 0.06%. They also went ex-dividend on Tuesday, and they're going to be paying out shareholders roughly 15 cents per share. And then bonds, so here the 10-year is at 0.72. The 10-year this past week was at 0.73. So it is actually slightly down by 0.01%. So 1 point to the downside, but not terrible, not a whole lot. That's not like alarming. And then we have mortgage rates here that are down 4 basis points to 3.10%. I also made an offer this past week. I went out and I'm actually in the process of buying a brand new home. It still has to get built. It's not going to get built until February or March, but we finally have something. We've made a ton of offers. It feels like I've made at least 5 to 10 different offers out there on some, suitable 4-bedroom homes with an office, and each one of them we gave them asking price, whatever they were asking for, and then somebody else would come along and increase their offer. So if somebody was asking for $400,000, they would offer them $420,000, but they would always offer a couple thousand way over asking, and it's a really tough area right now. So tough market out there as far as housing goes, but we finally got one. It's getting built, and we have that all signed away and resolved. So hopefully here February, March, we'll have our brand new office. Maybe we'll do an office tour or something fun. But that is essentially all that we covered this week. I did post our stock market moves on Sunday or Saturday last week, and then I did post an article on Monday when Apple and Tesla were splitting. The market was crazy. TD Ameritrade, Robinhood, Webull, and a few other platforms had actually had outages. So that is because of Tesla and Apple having split, and investors are pouring money into these companies hands over fists. I don't know if that's the saying, but definitely pouring a lot of money into the market, and it was all pretty negative. But hopefully they can just continue to buy more and average down here in the future. So that is going to be it for today's video. If you guys did enjoy this video, definitely go down below, hit the red button to subscribe to this channel, hit the bell to be notified every time we release a new video, and of course give this video a thumbs up, make it blue, and I will see you guys in the next video. Thank you for tuning in. Leave a comment down below, and I will see you next time. Bye.